Hello, today is June 14th, 2016. Going to take a look at the S&P 500. S&P SEP contract is currently in a neutral negative extreme market state with sentiment above the market. So we've got a market that was pressed to the lower extreme, and it's either going to bounce back into neutral, or we're going to see a transitional shift into more of a negative market state. So we can see the market structure here. Market is pressing into this lower extreme. We have a little bit of a reversal going on right now. Take a look at more of the micro. Market's pressed down. Here's the current situation in the order book. So we had a press through the downside pivot. We came down just on top of the alert distance, so kind of the extreme here at 20.55. So this is the level we need to take out to confirm that this thing's going to start to transition lower. A lot of times in the neutral negative extreme you'll get these breaks and sharp corrective rallies. We could have one of those now off this area, so we're going to watch the order book. If this thing shifts up or this paper moves out of the way, we could see a push back up to this Sierra minus level here at 2063.75. You've got some market structure here, and we got the top of the variance coming in at around 2065 even, and currently there's some resting paper there. One thing that's interesting about the market today is the VIX. VIX is in a bull trend, had a big move yesterday, and structurally the sentiment bias is way below the market. Here's the daily, and we can see the market is flirting with an upside pivot breakout here, so we're trading up here, but the big buying energy in the VIX is still way below the market. That's important to understand. Let's take a look more micro. So it happened overnight in the VIX. We had it press, break out of the upside pivot. So we have 2160, and we have our CRX Plus here at 2195. So the market broke out, pressed it to the extreme, and we had this sharp pullback here, bottoming out off the downside pivot, and now we're back in this zone. So at the moment, absolutely, the VIX can find resistance here. If we start to hold and price qualify above this 2195 level, that's going to be the risk on signal. So here I have the VIX and the S&P matching these two up. So you've got the VIX pressing into resistance while the S&P is pressing into support. That all makes sense. So who's going to make the first move? Who's going to give us the best tell? If the market is really going to roll over, the VIX is going to be trading above 2195. If that happens, we'll need some confirmation below 2051.5, but that's going to target around the 2034.50 level. And see the VIX running up to 2280, 2375. The extreme today in the VIX is at 2555 for any event. We are at an extreme, so you can have some violent action. So if we do get a sharp rally out of here, the VIX is definitely turned bid, so it's going to be a rally to sell. For below 95, the VIX is vulnerable to drop back into more of a digestive trade, which would cause that rally in the S&P. Key off this negative price structure. Align that with the order book. If we're going to continue to make these lower move lows, lower move highs, this nice negative action, you're going to see the order book continue to shift down. This paper is going to get out of the way. So for now, the key point on the S&P is 2059.5, and you can use that 2115 level in the VIX as a confirmation. Any questions, please contact me at info@jsservices.com.